So, market meditations, a short video. I try to keep this under 10 minutes. And today's topic is about CME Gaps. Of course, it's always the same. It's me, Joy Boule. And the CME Gaps have, several topics I'm going to quickly discuss. First, what's the CME Gap, why is it a thing, and how to apply it. Let's start with the basics first. And what you can see is that the CME Gap mostly exists because it represents the CME futures, and it actually compared with the other crypto markets, it doesn't have a 24/7 market but a 24/5 market. So that means that depending on your time zone, between midnight Friday and midnight Sunday there is no trading going on, so the market is quiet. No trading takes place, which means that effectively you have a gap in trading concerning the Bitcoin price for 2 full days, which compared with the other futures markets and just spot markets can create a gap. And what I have here is a chart of the Bitcoin perpetual futures FTX, but I have an overlay of the CME futures market. And here you can see, I'll just briefly turn off the drawings. Here you can actually see the gap. So this was last weekend's gap. It closed in my time zone concerning the 4 hours, 21st of January, and it opened up late or early 24th. So whatever happens in between here and here is what they consider a gap. And the gap, generally there's this meme or rule, quote unquote, that gap should be filled. And in this case you can see that there hasn't been hardly any movement in between. So the gap was immediately filled, but sometimes it happens that a large gap exists. If I switch on the drawings again, you can actually see that I have been monitoring CME gaps for quite a while now, and whenever the gap is filled, which means that the last closing price is being, let's say, intersected by current CME future price, then I turn green. And in this example, this was last weekend's gap, and it has just been filled. So the close was at 36,475, and you can see here that the high, you have to look somewhere, I think here, that the high has been 36,520. So it has just been filled. I will immediately turn it green. By the way, this chart you can make by just taking your preferred futures market or spot market and then just adding this layer on top. So now I have the current market, I have it hidden. Here actually this trick you can use so that you can actually see the gaps as real gaps, because if you only look at the CME futures markets, they will not physically show the gap, and in this way you can actually do it. So you have gaps. Generally they say, okay, a gap needs to be filled, and often you can use it as a trading opportunity. For example, here the gap, or at least the gap was created at this price level. It did not get tapped, just briefly. What you can see here is that price moves down and then wicks the level to close the gap and then sells off. So there's actually an opportunity to use it for trading. But then of course the question is, do gaps always get filled? And if you zoom out a little bit, here's the 4 hour. So here you can quickly see the short green lines actually indicate that gaps were immediately filled, mostly the week after, sometimes the second week after, and sometimes it takes quite a while. So after the first all-time high there was a gap here, and it took until the second touch of all-time high, let's say the new all-time high here, it was actually the moment where this gap was closed. And sometimes it takes quite a few weeks and even a few months. And of course, Twitter has been raving all about the gaps. Let's say here was a huge gap. So if I zoom in, here was a huge gap in between 34,500 and 32,470, which hasn't been filled. Not fully, almost, but not yet. So here you can see it has been ticked. Maybe we make a move down, maybe we don't. The highest gap, still open, happened after this close. It opened much lower, ranged, and it just didn't, it only tapped this wick and then just sold off. So there's still a gap open here. Maybe for the next market, who knows. So this is always a nice meme when it happens, but if you further zoom out, which I'm going to do now, you can actually see that there has been quite a few gaps made since the corona crash in March 2020. Since then I have been marking out the CME Gaps, and all have been filled except the orange lines below. I don't know why I made them orange, but it's just to indicate that if they talk about the 32,000 gap, you still have many gaps below. And I think even after 2017 there was a gap at around 1200, but I'm not entirely sure. So what can it do for you? You can actually use this to trade, but it also means that it has to fit your trading style, which would be short-term trading. It's not my cup of tea. I normally apply it in a way that I use it as a reference tool or maybe confluence tool to see would this be a logical area for price to react. And often in this example, but also other examples, this is I think also a good example that it taps, but then of course price in general, the naked charting of price, in my opinion always overrules secondary reasons for trading, such as the CME Gap. You know, these are really nice examples. Tap, move up, here you have another tap, and I think there was another one somewhere before where you can actually see that the CME Gap is a perfect example where it just gets filled before moving in the opposite direction. For example, this is a nice one where it moves in the opposite direction, but overall, you know, I think in general it's quite the mean, and for me there's not much reason to actively trade it, only to use it as a tool for reference. I will put a link down below to an article that actually has more information on this, so you can actually it talks about how to trade the CME Gap for Bitcoin futures if you are interested in doing so. That's it.